Hi dear visitors, welcome to Economy Watchers. In this video we are going to see the latest news to keep you informed and what I think could happen in the future of Bitcoin and the crypto market. At this moment, there is a lot of fear in the market for what I think is the last opportunity we have to enter first before the avalanche and FOMO. Get on because we're going to the moon soon. As you should know, the market has been moving a lot lately. The on-chain data and analysis platform, CryptoQuant, released its outlook on the Bitcoin market. A rebound in demand growth is crucial for prices to stabilize and potentially increase. Regarding the current price drop, he explained that it reflects a continued slowdown in demand after the record growth of the first quarter. However, it should be noted that the decline does not erase all the rise that it had at the beginning of the year. Currently trading at $57,000, Bitcoin is 22% below the all-time high it recorded in March, maintaining a 35% increase so far in 2024. This scenario takes place 2 weeks after Julio Moreno, CEO of CryptoQuant, warned that it is not the halving that alone produces the rise of Bitcoin. Although this event has an influence, since it reduces the issuance of the currency, limiting the sales pressure of the miners, he stressed that the strong appreciation that it historically had afterwards came from a large increase in demand, which is not happening at the moment. At the same time, like other specialists, he has highlighted that the impact of the halving on supply is increasingly less. Miners are compensated with half the coins, so they do not have a large volume to immerse in the market. Furthermore, almost the entire supply has already been issued, even though there is still BTC to be mined until the year 2140. In this sense, for Bitcoin to rise again this year, something is required to drive demand. A possible catalyst is greater awareness of the scarcity of BTC, and that encourages large investors not to want to be left out. Historically, this characteristic has attracted market interest, as it does with gold. Christina Hooper, global market strategist at asset management firm Invesco, said evidence of a disinflationary trend will motivate risk assets. In this sense, Bitcoin could be driven higher, so it is key to follow the economic data and the next CPI report in the United States on May 15th. Although it is necessary to consider that, even in a macroeconomic context that discourages the demand for risk assets, Bitcoin could benefit. This was suggested this week by the asset management company ARK Investment Management, since the currency has gained demand in both positive and negative periods for the markets. For example, the scarcity and self-custody power of Bitcoin have motivated its demand during last year's banking crisis, as well as the war conflict in Russia-Ukraine and the Middle East. As far as technical analysis is concerned, Bitcoin shows a percentage decline in normal price within the current bullish cycle. Analysts like Scott Melker argue that you should be prepared for even deeper declines of 30–40%, as you have experienced in the past. In the current cycle, the retracement periods have lasted a maximum of 63 days, as a temporary scenario for taking profits and testing support. If this were repeated, the market would find the bottom of the fall within the next 2 weeks and then continue rising. This is something that may also be what is missing, as it is a healthy phenomenon. For an uptrend to be sustainable, there must be pullbacks that show strength by experiencing higher and higher lows. As Crypto News reported, this is not the first time that Bitcoin has experienced a decline after the halving. In fact, it resembles the behavior that occurred in 2016 when, after a fall, the market gained strength to break upwards. On the other hand, spot Bitcoin ETFs traded on U.S. markets yesterday, May 1st, had their worst day since they were launched. In total, the capital outflow from these investment funds amounted to $563 million, equivalent to 9,750 bitcoins. The ETF issued by Fidelity was the financial product that had the largest capital outflow, amounting to $191 million. FBTC surpassed Grayscale's GBTC fund in capital withdrawals, which had an outflow of $167 million. This brings its total Bitcoin outflows to $326,000 since its launch in January. As Crypto News has reported, this is the only ETF that has had daily losses since it was issued. The capital outflows are mainly due to the high management fees it has compared to its competitors. The fund issued and managed by ARK Invest under the ticker ARKB recorded $98 million in net outflows, while the Bitwise ETF had outflows of $29 million. The only ETF that had no exits and no inflows was DeFi from the investment firm Hashdex, as has happened since its late launch just over a month ago. For its part, the ETF managed by BlackRock gave a surprise yesterday, having its first daily net outflow since it arrived on the U.S. stock market, with a loss of $36 million. Just a week ago, IBIT had its first day without net capital inflows, breaking the streak of 71 days with numbers in green. What happened with Bitcoin ETFs, especially with IBIT, is not cause for alarm for ETF specialist James Seifert. In a message via X, he said the ETFs are performing smoothly across the board. Entries and exits are part of the norm in the life of an ETF. In a similar line of thinking, Nate Geraci, president of the ETF store, also spoke about IBIT, comparing the $36 million in exits with what it has raised so far, which amounts to $15 billion. In this way, he wants to show that the loss of May 1st does not represent a major inconvenience.
To put it in perspective, Geraci compares the IBIT fund to the outflows of two gold ETFs. The iShares Gold Fund, also from BlackRock, has outflows of $1 billion so far this year, while the SPDR Gold ETF has outflows of $3 billion. This is what happens with ETFs. Capital inflows do not increase in a straight line, he adds. As for Changpeng Zhao, he was charged with a crime more similar to Sam Bankman-Fried's than a regulatory violation: failure to have an adequate system of anti-money laundering controls, while SBF was charged with wire fraud in connection with the secretly looted billions of dollars in cryptocurrency escrow with FTX to prop up Alameda. Zhao has not publicly commented on the case between U.S. authorities and Binance since a $4.3 billion settlement and his guilty plea in November 2023. He submitted hundreds of pages of letters from industry leaders, family members, and others. Judge Richard Jones commented on the wave of support for CZ at his sentencing hearing, adding that he had risked his entire net worth for Binance. Before finishing the video, I would like to give you some advice on investments and finances. Number 1, continuous learning. Stay informed about personal finance topics and continue to educate yourself on investment strategies, money management techniques, and financial planning principles. Number 2, manage debt. Be cautious with debt and strive to pay off high-interest debt as quickly as possible. Avoid taking on more debt than you can comfortably afford to repay. Number 3, invest for the future. Start investing early for long-term financial growth. Consider options like retirement accounts, e.g., 401k, IRA, stocks, bonds, or mutual funds. Diversify your investments to spread risk. Number 4, emergency fund. Build an emergency fund that covers at least 3 to 6 months' worth of living expenses. This fund acts as a safety net during unexpected events like job loss, medical emergencies, or car repairs. In my opinion regarding Bitcoin, and despite the challenges it has been having, I believe that the price of Bitcoin could reach $1.5 million in the next decade, driven by changes in the investment infrastructure and the possible approval of ETFs of Bitcoin spot. This prediction is based on the expectation of greater adoption of Bitcoin as a primary currency, strengthened by the growing participation of institutional investors, the Bitcoin. I hope you liked the video, and I hope to see you in the next one. Stay tuned.